What up, everyone? In this video, I want to talk about a very simple and effective trading strategy that I use, which has to do with price and volume with supply and demand. Let me tell you that the more simplistic your trading is, the deeper your relationship will be with the market, and that's very key. And because of that, you're going to become one step closer to taking very good trades and becoming a profitable trader. Before we get into this strategy though, if you want a very good resource, I'm going to link my Instagram in the description below at Investitrade. I post daily trading recaps on here, along with very good trading tips and tricks that you won't find anywhere else. You're definitely missing out if you aren't following this. The link will be in the description below. But now let's get right into this price action video. Now, if you've all been following me, you all know I use supply and demand as the core to my trading strategy, confluence with price and volume. Now, the idea here is to play a bullish position on the market, whether you're longing the stock or you're playing the call options to capitalize on an increase in price at some point in the future. We look to be bullish at a demand zone because this is an area where the supply or demand equilibrium was out of balance, creating a demand imbalance because at one point at the origin location, the demand or the buyers exceeded the supply or the sellers, causing an imbalance at the first place. We wait for the market to come back, retest this zone after it formed, and then we look to play the market long for demand and vice versa for supply. Now, the two main components to this strategy which make it effective, in fact, it's the only components that I look at to make it a valid trade, is the where plus why components. I need to see these two things for me to put a valid trade on because I only put a trade on when my edge is present. And when my edge is present with this strategy, it's extremely powerful. So the first thing is the supply and demand imbalances. They give me my where component on the chart. It's essentially where I want to be active. I pinpoint an area of interest to be present in the market. And these zones are my advertisers to price. Just like any other market, you have to advertise price to see if buyers or sellers are going to hit that price, they agree with it, they find value at it, or are they going to buy and sell? So essentially, these supply and demand zones are the first component. It's the where component and where I want to be active. It's an area of interest on the chart. So every day I post pre-market plans in my Discord just to get a good area of zones that I'm looking at, setups that I'm watching out for, just anything that could happen in the market. So the setup yesterday was on Netflix. This thing was sleeping. It was getting ready to break out. We created demand at a double bottom at the 514 and the 513 area prior to breaking out. I would love a pullback into these levels to play calls. And if the market's strong, I'll also be looking to play calls on a breakout above a key resistance level to the upside. So with this strategy, it has to do with naked price action. As you can see, my charts have demand zones, they have price itself, and they have VWAP, which is the volume weighted average price. I don't have indicators telling me when to buy and sell. The greatest tool and the greatest indicators to use in the market are price and volume itself, because that's the only thing that could physically move the market. I'm not going to bash indicators, but other tools cannot physically move price like volume does and price itself. So here's this 514.39 imbalance on Netflix. The market opened up, and within the first 3 minutes with some nice buying pressure volume inside of this demand zone, we started moving back up, and this was actually the low of the day from a nice 10-11 point rally to the upside. Apple's another setup. This bounced off of the 146.36 demand zone yesterday, so buyers were factored in. We also had demand at the 146.11 area. So this is where market context is a key component to this strategy as well. Understanding the participation between buyers and sellers, who is showing effort, who is showing reward, and then putting yourself in the shoes of those traders. So context is a very key component as well. So this demand zone at 146.36 was created from this balancing out period over here. We also had another zone which was created from this consolidation phase, followed by this extreme and violent move to the upside. This validates as demand because the demand exceeded supply. How do we know that? By this aggressive rally and move up to the upside. So now at this point, once this is formed, we wait for price to come back down and retest the zone where we look to play the market long or play a bullish position. So we bounced off this zone on Wednesday, and the day that I sent that plan out, which was on Thursday, was the same zone we were watching, because these buyers over here from the day prior, this has to do with context, were factored in. So put yourself in a position of a buyer down here. If we come back to test the price that we got in at, they want to show effort in defending that. And if they don't show effort, we're going to continue selling off. But if they do show effort and they get rewarded to the upside, we're going to have a very strong breakout, especially that we had this downtrend line, which was confluent with the demand, that once we broke out, we had a very strong rally to the upside. One thing I do want to say about these zones is they aren't magic. They don't work out 100% of the time, which is why we only went over the first component, which was the where one. Now we're going to go over the why component, because this will give us that missing piece, which will formulate a valid trade. So understand, just because we're coming into a supply or demand zone does not mean we have to take a trade. We need that second component. And that second component is my price and volume, because it gives me my when. It tells me when I want to be an active participant. It gives me confirmation, and it puts the final piece together for the trade. It validates me entering that trade. Any trade you put on, you need confirmation. I use price and volume. I have some tools that I do use that I go over with Investor Trade members. But price and volume is the core to every single trade that I put on. And without these two components, without my advertiser and without my validator, my edge isn't present, and I'm a spectator on the sidelines. Put yourself in the position of a, let's just say, car market, and you see a dealer advertising a special sale on a Lamborghini or just any car. It's a very good price and you want to buy it. Now you see him advertising it, you go to look at it, and you need confirmation factors. Do you like the car? Can you make money off it if you're going to sell it at a future price? Does it fit the criteria that you're expecting in whatever you're looking to purchase? So we have someone advertising it. Now we come into the market and we need to validate that advertisement to make sure it's good for us. This is the same thing with the market. We can have our zones, but we need price and volume to validate it if it's going to be a good trade. And once we get those components, we have our edge present. And if it's not present with these two components, I am a spectator and I sit on the sidelines, patient enough for the next deal, we can call it, or the next setup, or whenever my edge is present at some point in the future. Now, this is where as a trader, you have to be a little creative. No one's going to know what can happen in 5 minutes from now or 10 seconds from now. So you have to be creative and react to the story that the market is currently telling you. And we have to do this without any emotions hindering our process. I can guarantee you, you could have success with any strategy or style, but it's your emotions and your discipline, your patience, your fear and greed, which are really a roadblock in your way from making profits. So as easy as it is to say, trade without emotions hindering the process, and be reactive to the market and as creative as possible to make a trade, because no one knows what's going to happen next. So Apple, from the example earlier, we sold off into this demand zone. It's acceptable to get long once buyers show up to the zone. With how I gauge that is price and volume. I have many confirmation signals that I do look for, but anything telling me buyers are buying at a demand zone or sellers are showing interest at a supply zone. Apple sold off into this zone. We could take a trade here. We came up to VWAP. We sold back off. We double bottomed at that zone. Could be another area. Your risk is extremely tight when we double bottomed. For example, let's just say we're getting long above this little high over here. Our stop loss is about 30 or so cents if we put it at the low of the day. I never put it at the bottom of the zone, because my trades and how it fits my personality is if I enter, the stock needs to move in my favor right away, or else I feel like I mistimed the market. So my trades, especially with this strategy, have very little risk, and the risk is defined, and the reward is extremely high as long as we take profits following our plan and we ride the waves and we ride the trend in that direction we're looking to buy at. So let's just say we get long here, our stop's 30 or so cents, very little risk, and this thing could have had a nice, if you sold at the top, about $1.50 move to the upside. Now another area, if we go to a 5-minute, could have been once we broke out of this little wedge that we've been wedging at for the past 2 days. On Thursday, we broke out of it. This could have been another area where you had to find intraday clues for you to get long the market as well. And then we continue making higher highs and continue making higher lows. So there's tons of different ways. Just make sure you use price and volume to confirm it. It's what I found the most success with. That Netflix example I showed you earlier is actually a trade I took, so this would be good to break it down. So we sold off, we did bounce at this demand zone, but sometimes, even though we bounce at demand, I don't find the valid area that I could have defined risk and find the valid area where confirmation or my where feature is really screaming at me. So yes, we bounced off demand. It really did not provide a nice opportunity here for me to get long. We pulled back, we did make a higher low over here. So that could have been an acceptable area. What I liked here was how we were hugging above VWAP. Holding above it, we were basing it, and we had resistance at 518. So as soon as we broke above 518, I saw volume coming in, and I played Netflix calls to the upside. And this thing was pretty much an all day, all afternoon rally. We got above our 521.86 key level, and this thing ran about another 3 or 4 points from that as well. So I bought, let's just call it 3 points higher than demand. It wasn't at demand, but I used the context that we bounced off demand. We have buyers factored in. We're making a higher low. All different theses and confirmations that gave me my when feature or gave me extra validation to put the trade on after buyers were advertising this price to me. Amazon's another example. We sold off into this zone. We actually tagged the 33.40.72 zone perfectly and bounced. Some nice buying volume coming into the market. We move up out of this zone, and then we came right into that key level at 33.89 area and had trouble getting there. And then we lost volume and volatility all afternoon, and that's something you want to avoid. Now, another perfect example is look what happens the next day, right? We come back into the zone that we bounce at. Buyers don't defend it. In fact, they did not show any signs of buying. So there's really no reason to get long here, especially with the context of the market today. Sold off, no bids found in the market. Good thing to avoid it and stay away because we continue to sell off. And there's no reason to catch a falling knife and playing something to the long side. Even though we're at demand, we still don't have valid confirmation at the zone. Now, I don't calculate win rate. It's irrelevant to me in trading. But when we have our two components align, we have our advertiser and we have our validator, I would say this strategy works out at least 70% of the time. And with a very small risk compared to our reward, a 70% win rate, we could afford to lose a lot more of the times and still be extremely profitable. And the tip for this strategy, which will give us more validation, is to look at the market. Here we had a balanced period on the NASDAQ. The market opened up, sold off into demand, and this was at the same exact time that Apple trade, that Netflix trade, and that Amazon trade also bounced off demand. So when the market is giving us our signs along with the equities, that's when we could take a 10 out of 10, A+, high quality trade. So it's very, very important to look what the market's doing. It is the parents of the equities that we normally do trade. So always want to confirm with the market. Make sure we're trading in the same direction. Make sure it's an imbalanced market and we're not trading a balanced market where the volatility is kind of dead, moving in a tight range. You always want to have a relationship with price and volume, whether you're talking about the market in relation to equities or you're talking about equities themselves. You need to formulate a relationship, as weird as that sounds, with price and volume because it is a completely game changer to any strategy that you use. So I'm going to leave you all off on that note. If you enjoyed this video, be sure to hit that like button. Subscribe to my channel if you're new. Be sure to follow me on Instagram. And if you want to actually learn more, be sure to check out the links in the description below for investortrade.net. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. I will be adding a voice chat starting next week, so it should be pretty good. And besides that, I think I'm going to end it. Peace out.